I think a lot of the reasons why the yield is coming lower at the moment are temporary. They are flow reasons, they're technical in nature. So for example, the ECB of course is now buying 80 billion of bonds a month, yet it hasn't yet moved into corporate credit. That we expect it to do in June. I mean, it's announced they'll do it at the end of Q2. So that 80 billion, the extra 20 billion has to be made up in public sector bonds. At the same time, we're going through a period where there is a net negative issuance of bonds. This week in particular, I think we've got negative 30 billion if you can take into account redemptions. So those pressures are coming to bear on the market. However, we think they are temporary. Flow arguments are always beaten by fundamental arguments. The Eurozone is recovering, albeit at a slow rate. And as we see the data improving, in particular the inflation data, assuming that energy prices don't take another lurch down, we should see yields rise again.
What's your sense of how involved investors are in the market at the moment, or are they just being squeezed out by central banks?
I think it's a different situation than we had this time last year. I mean, this time last year we were very much looking at a speculative frenzy, and we were pointing it out ourselves in our research. This is different. You know, we're not seeing the same kind of rationale being applied to taking long positions in the market by investors as we did last year. So we think that these headwinds to higher yields are in place, but they are temporary.
Justin, I mean, you know, once the buying migrates from the government bond markets into the investment grade bond market, how big an impact is already built into the price, and how much further, I think, can we expect the yield structure to come back? You know, are we talking about another 30 or 50 basis points?
I mean, you know, when we forecast, I mean, we were one of the few banks that forecast the ECB coming into those markets. We looked at it around a 10 basis point tightening of high quality IG, and on the higher beta around 20 to 25. Obviously, we got a lot more than that. So it's difficult to really see how it plays out from here. The question is, of course, is how much will the ECB be buying? We think it's largely a symbolic act on the part of the ECB. We're not convinced that necessarily the ECB is going to tell us how much they will buy or how much they will have bought on a regular basis.